Good morning, Steve Reed in Chicago with the morning grain comments. Hope everybody had a safe and nice Halloween weekend. As far as markets are concerned, mixed trade overnight. Beans are down 5 cents coming off its lows. Actually, soybean oil is a little bit higher, while meal is about unchanged. Corn's up a penny. Wheat's anywhere from 6 to 15 cents higher. Stock market's higher, the dollar's mixed, crude's higher and testing $84, and copper's lower. The Chinese PMI data suggested that their economy is slowing down, whether it's because of supply chain disruptions, whether it's because of higher prices, especially in the energy market, or whether it's because of strict COVID restrictions. We did note that Dalian futures, everything is higher, except for everything is higher in the Dalian futures. We have been hearing talk about their Jan forward margins improving as far as crushing is concerned. Hog margins are improving, and so we'll see if that increases their soybean buying. As far as the trade is concerned, many people are looking at a corn yield of 177 versus the government's 176.5, but they're also looking for higher ethanol and export demand, which would give the carryout somewhere around 1250 versus the government's 1500. On the other hand, most people are looking for a bean crop maybe, let's call it 25 million bushels bigger, and exports may be down as much as 90 million bushels. The biggest carryout that I've seen is 415 versus the government's 320. Talking about next year, 92.4 million corn acres, a 181 yield gives a crop of 15.2. Demand at 14.7 would give us a carryout of 1.7 billion. That kind of limits the upside in the corn market unless there's a weather problem. In beans, 87.3 million acres. We have a crop of 44.55, demand at 44.02, so the carryout somewhere between 420 and 445. We expect that the corn harvest is 72% done versus 66 average. Bean harvest 77 versus 80 average. As far as China demand is concerned, some people have a matrix that they'll take 14 million tons of corn from U.S., 11.5 from Ukraine, and very little from the Brazil. That will give them 26 million tons imports versus 30 last year. For next year, they've got 5 out of the U.S., 13 out of Ukraine, and 8 out of Brazil for 27 million tons. We also note in the bean side, 29, maybe 30 million tons from the U.S. this year versus 35 last year, 30 next year, 65 from Brazil versus 56 last year, 66 next year, and 5.5 from Argentina versus 3.5 last year. That gives them a total this year of 102 million tons of imports versus 98 last year, and almost 104 million tons next year. So the key there is South American weather. Good showers over South America over the weekend, and I think right now we're looking at the possibility that in the next couple of weeks or so we'll start to see more drier trend in Argentina and southern Brazil. So kind of a mixed trade, beans a little bit lower, wheat higher, corn unchanged to a little bit higher.